Hello, everybody. Welcome to the Fintech Combine. I'm your host, Kris Kovacs, and this is the series where we talk with, and yes, sometimes about, community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this Powered by Curql episode, we're speaking with Alison Alvarez and Tomer Borenstein about their company, BlastPoint, and how they are helping credit unions better understand their members and their behavior. Curql is the investment fund created by credit unions that has now made more than 40 investments in fintech startups, bringing the very best applications to the credit union marketplace. They provide both investment to the fintechs, but they also bridge the gap and help them start to acquire customers inside the credit union space. For more information about Curql, visit Curql, Curql.com. So if you're ready, let's suit up and get out on the field. Alison and Tomer, I'm so excited to have you on the show today. Why don't you start by telling us a little bit about yourself? So, Alison, why don't you go first? Tell us about your journey.
Hi. Nice to meet all of you. I don't even know where to start. I am the mom to a 15-year-old. I founded this company along with Tomer when I went back for my second graduate degree at Carnegie Mellon University. So I have a background in AI and computer science. I built my first AI system in 2001. Tomer and I founded BlastPoint as part of a class project. We joke that we're the longest running homework assignment in the history of Carnegie Mellon University. We're really fortunate to still be here running this company after 10 years of working together.
Yeah, we just hit 10 years like last month.
Yeah.
That's awesome. Tomer, tell us about your journey.
Yeah, long journey. I originally from Israel, grew up there for my childhood. Weird story, but moved to Thailand at 13, did high school there, went to kind of like a tropical Hogwarts. It was pretty cool. And then I went to Carnegie Mellon for what they call ECE, Electrical and Computer Engineering, but I was a turncoat and mostly focused on computer science. And as I was wrapping up my time there, I met Alison and I started getting more into machine learning and data science, and BlastPoint was born. And part of why we moved around all those years is because my dad is an entrepreneur. And so I got the bug from him, and here I am 10 years later.
Yeah.
So what was the inspiration for BlastPoint besides completing your homework assignment?
Yeah. So I was working for a company at the time where we were building products basically to help sell media buys for large media companies. So think your big cable companies, large cable channels. Univision was one of our customers. So was Comcast. And I was building things for researchers. And as much as I love researchers, they were gatekeepers for the salespeople on the staff. And like the really good salespeople had questions about data, but they just thought about it really differently than researchers. Researchers, like if you give them data, they'll roll around in it like a pig. But if you ask salespeople, they're very goal oriented when it comes to data. They're just like, can I have a red light or a green light for doing this thing or not doing this thing? And while I really love my job at this company, I just couldn't get out of my head that there was a better way to do things. And so when I met up with Tomer, Tomer's it was part of a pitch event at the Carnegie Mellon, part of the Tepper School of Business. And Tomer said all the other ideas sounded like Uber for dogs. And my idea was the one that sounded like really practical and meeting a real problem. And so that was the nexus of why this started, because we just felt like people were getting gate kept and talked down to when it came to pretty fundamental data products. And we knew there had to be an easier way, that red light, green light, that was not for me. That was literally from one of the salespeople that I talked to. And honestly, that's kind of been like a core principle that we've had ever since then. Just keep it real simple. Do I do it or do I not do it? That's just what people want to know.
Has that gatekeeping mentality changed? You guys talked about you've been around for more than 10 years at this point. Have you seen the kind of use of technology, the focus on data intelligence, has that changed over time? Are more people getting closer to actually being able to use the data with some of the tools that are available today?
Yeah, I think so. I think, even when I talk to CEOs of credit unions, right, when we talk about data and intelligence and AI is, such an umbrella term, you have to be really specific about what you mean. But I'm still going to use it as an umbrella term. It's sort of like the internet, right? People are recognizing that 30 years ago, the question of like whether to have a website was like a normal question to ask, but today it's not a question. Like, of course you should have a website. The question is not whether you should have it. It's more about like, how do you differentiate, et cetera,
Yeah.
et cetera. And I think AI and data and intelligence is going to be the very same thing, especially in an industry like the credit union industry, where we've done some really cool analysis of NCUA data that I'm happy to kind of share the link to. It's free, but it basically shows that there are credit unions that are thriving on one side of the market, and credit unions that are going to have to either merge, get acquired, or otherwise disrupt in order to get on the right side of things. And the only way to do that, in my opinion, and especially compete with these bigger banks that are coming down market to eat our lunches, is by leveraging this kind of technology to essentially do what credit unions do best, which is amplify their personal connection with their members and kind of scale that unfair advantage that they have against banks. And I think, kind of calling back to the 30 years ago, people didn't know the internet would be the internet. I think people do recognize that AI is going to change things materially. And I think the question is whether you get into it now when it can still be a differentiator, or are you going to wait 30 years until it's just like a requirement for entry?
Yeah. And by then it's probably too late, right? I mean, that's the reality.
Well, it won't be
It's happening.
Yes.
Yeah, the adoption cycles are happening much more quickly. How does BlastPoint help a credit union differentiate itself in the marketplace?
Yeah, I mean, the biggest thing, the way to think about BlastPoint is that we are a member intelligence platform for credit unions. Essentially, what our platform does is it takes all of your core member data, and you don't have to be super sophisticated. You can have snowflakes in a data warehouse, or you can have just a bunch of Excel files. We basically take all of that data and make it work together, and we enrich it with a ton of data from other places. And then we build these machine learning models that are designed specifically for your credit union and members. And that does a few things, right? Like, at the baseline level, it just allows you to provide the kind of experience your members expect of their service provider in 2026 without breaking the bank or hiring more people for your team or whatnot.
Yeah.
But the other thing is because everyone else kind of uses these off the shelf, like either they spray or pray, or they use some kind of off the shelf Experian based or something propensity model that all of their competitors also use. So that doesn't give you any competitive advantage. But if you have something, I guess not to be too much of an infomercial, but the way that we really approach this is that every model is really looking at your member data, your market, your business logic. And because of that, that literally ends up giving you that unfair advantage compared to these other FIs in your service territory. Not to mention that because we cover over 27% of the United States at this point, because we work with lots of utilities and credit unions and things like that, we also just have this early signal in our models that no one else has, that just lets you know when people are going to behave a certain way before any other institution might.
Yeah. The other thing I'd say is that we never want to be guilty of treating every credit union like they're the same. I think that the struggles that one credit union has in West Virginia is going to be completely different from the one in, say, Silicon Valley. And if everybody's being given the same thing, it's not going to work because everyone's living in a different environment. The United States is a big country. We got a lot of diversity around here. And so understanding exactly what's going on in your backyard, what levers you have to apply is extremely important. And so treating each institution like individuals, just the way that credit unions treat their members as individuals, I think is extremely important.
Yeah, I love that framing. What she said.
Yeah.
What she said. So, you said something that for some credit union executives is going to immediately raise questions. So let's put it to bed. Core data. How do you get core data? What are the cores you work with? It's a question we hear all the time.
Yep.
Ready? You have an answer for this. Ready? Go.
Yeah, we work with any core, especially all the typical cores that you're familiar with. The process takes less than 3 months. We have a data onboarding team that does all the heavy lifting for you. When I think about our differentiators, we can talk about like all of our data coverage and our incredible platform, but like one of the biggest things is just time to value. We know how to deal with your core data in a way that gets you basically to having what's called like an MDM kind of golden record for 90% of everything that you'll need it without having to build a data warehouse from scratch or all the way, which is why we're able to do that in less than 3 months for credit unions.
Mm-hmm.
Yeah. And, our latest record is 28 days onboarding our latest credit unions. We're able to do it really, really fast. We work with your data as it is. We love you as you are. And one of the other things I'll say that's, a fairly big deal is that it's not just, hey, let's onboard data. It's what do you do with it? Because it's just not good enough. I think data lakes are incredibly important. I think they're a game changer with every single credit union that we work with because it really enables all of their team. For us, we don't sell by seats. So if you have a subscription, literally anybody in your institution can log in and use the system. I don't want to nickel and dime anybody. But that means that not only do you have these consolidated records, every single person in your institution can access it and derive value. And one of the things we see sometimes with our customers is they're like, great, we have all this data. What do we do with it? And I think that's also the next step that's incredibly important. That is, hey, okay, well, here's where you are in your benchmarks, not only against your peers, but your peers in your region. And here's where you're really knocking it out of the park. Here's where you're a little behind. And once you understand that conceptually, we do this for every single one of our credit unions that we work with, and honestly, even the ones we don't work with, to give them this perception. And then once we have that, we're like, okay, here are the things that you can do to improve this and just be top of class wherever you need to be.
Mm-hmm. The way I think about it, especially if I'm a CEO exec kind of tuning in, there's all of this, is AI hype? Is it a bubble? There was this, I think it was 25 MIT case study that 95% of AI projects or initiatives don't have ROI. And then there were other reputable studies that said the exact opposite. And so like, is it, who's got it right? Who's not? I think the main thing that separates people who get value from AI, again, a very umbrella term, versus not, is whether they are doing it for a particular reason. And so we always start with a goal or a success criteria in mind, because if you don't, then it's just like, hey, I know I need to go do AI. But if that's the frame, then what kind of AI, what for, how do you know if it's successful? So we actually use data at that level. So if you go to, this is a free tool, anyone who's listening can go in, cuscorecard.blastpoint.com. That's our totally free system that looks at every piece of NCOA data and creates an index and a scorecard for every single credit union and a leaderboard in their market and all of this stuff. And the reason that we like to start there, and this is where most of our conversations start, is because whether you're going to get value out of AI starts with the goal that you set, and the goal that you set starts with kind of like your macro picture. How are you doing compared to the rest of your neighborhood What pieces of your data show kind of a need versus, this is all good there, because the places that show up red on that scorecard, for example, or in
Yep.
your NCOA data, maybe acquisition is your big problem. Maybe, growing share of wallet is what you want to focus on. Maybe reducing attrition is what you want to focus on. Maybe just overall improving efficiency and things like that, right? But that is what you have to start with to say, okay, this is the kind of AI-based strategy I can implement. But if you hadn't done those first steps, which BlastPoint does, right? We have these scorecards, we define the goals. Based on these goals, the platform creates these strategies for engagement and all of this stuff, but it always starts with that goal in mind.
Yep.
So talk to me. In fact, I was playing with the CU scorecard before the interview, and I was entering in some of my friends' credit unions. Some interesting insights there. Congratulations on putting that together and making it available. If I'm a credit union CEO, you load my data. What types of strategies, what types of actions am I taking next in order to realize the value that you're going to deliver?
Yeah. So almost everything that we do fits into a framework that starts with, let's set the goal and define what success criteria looks like. And our platform will literally do that. You can literally set up any kind of KPI that you want, like products per member, or members that join within a particular cohort, or generally really whatever you want. We can codify it as a goal, and our platform literally searches through all of your data and recommends strategies to move towards that goal. And some of that might be like, hey, if our goal is to drive deposits and grow share of wallet, one of the plays that our platform will suggest is, hey, let's target all the people, all the members who don't have a checking account, but have a high propensity to have a checking account, which we can also know that's where some of the AI ML piece comes in. And our platform also tells you, out of this group that we've identified as potential, these ones should get an email, these ones should get direct mail, these ones should get, and then you press a button and kind of automates those for you. And then of course you're able to see that move over time. And then when the next quarterly NCOA data drops, we can also see how that reflects in the macro data as well. And that's just one example.
Yeah.
So you set the strategy, you understand the KPI, and then you help personalize the message that goes to the member that helps then reach that goal or help drive the kind of behavior that you're seeking.
Correct.
Exactly.
We have like a cool little feature that simulates a virtual focus group based on your member personas, so that you can make sure that the messaging and marketing stuff that you're putting out there is actually aligned with the people, not just with the channel, but like the way you're talking about it actually aligned with who you're targeting.
Yeah.
That's very cool.
And one thing we're really seeing credit union CEOs struggle with are things like lifetime value, understanding, hey, who's in my footprint, who could be, the biggest potential lift. So it's things like that. And a lot of the credit union CEOs and even the CFOs we work with really overthink a lot of things. And what we want to do is break things down to the essentials, where, for example, for lifetime value, it's, the average value of the product times the customer lifespan, which means that there's so many different things you can do to affect that in a positive way. So it can be anything from, hey, I'm going to reduce churn so I have people with me for longer. I'm going to find younger customers to go after, so they're going to be with me for a longer amount of time. Or for my existing customers, I'm going to find ways to deepen my relation, or not customers, members. I'm going to find ways to deepen my relationship with them so that I'm able to provide more value and we have more things that we're working with on that customer. Member. And credit unions are unique. They're nonprofits. So there are big ways to communicate with and work with a community. And we see that a lot of the credit unions we're working with are doing their best, but there's definitely meat on that bone with almost everybody we work with.
How do you help them understand the portions of the market that they're not serving, right? One of the critiques of credit union growth strategies are that I was founded as a factory, employees credit union, maybe
Yeah.
a steel company, right? Like Pittsburgh. I was started there. My members are steel workers. So my data is going to point me toward recruiting more steel workers,
Yeah.
right? Well, that may or may not be a great strategy when you think about the diversity that's coming into, our cities and towns. How do you incorporate data from outside their core to help them understand those other markets that are there, but they're just not targeting yet?
Yeah, I'm one of those customers. I'm a member of the National Institute of Health Federal Credit Union. Have I ever worked for the National Institute of Health? Never. But I totally understand that because there was a branch that was near me, and that made a big difference in me walking through those doors and sticking around. I've been with them for multiple decades at this point, so I totally understand this question. I think it's really amazing what you can do with a credit union once you understand it. And sometimes the name can be a little misleading, where you think that it's not for you, but actually it is. And there's a ton of stuff we can do just looking at, even your branch locations, looking at your charter, looking at where you can be and what are you missing. So we can look at your average customer profile and then look at, hey, here's what's in your immediate footprint. Here's where your gaps are. Tomer, I know you've got way more to say about this.
Yeah, I mean, the way I think about acquisition in particular, and especially because credit unions are in this era of a lot of times reinventing themselves, you see a lot of credit unions change their charter to be more open. You see credit unions literally rebrand themselves to not have this kind of confusion, and they do it in a tasteful way to respect their origin story and things like that. But when I think about credit unions generally, most credit union member bases skew older, and inherently that also gives you a similar sort of bias that a historically closed charter might have, right? And so when I think about acquisition in particular and how we approach this, there is who has been a historically good member for you, right? Like Alison mentioned, LTV and products per member, and very easy for us to identify that slice and analyze them to understand what makes them who they are. Then there's also who you're acquiring now, right? It's just like factual. These are the members that are walking in the door in 2026. They might look very different than your ideal members. And then there's who do you want to acquire, right? In a particular market, particular age group. Obviously, I think generally everyone is trying to capture younger audiences as well. We do that by making sure that we know, even for prospects, what life stages they're about to go through. What are the best channels to engage with them? What is the best first product? People talk about next best product, but we do first best product as well, because oftentimes where you've been and where you go are not always the same places. And that's where kind of the machine learning stuff helps you, look at your existing members and how they're behaving. But because BlastPoint has that 20% and growing coverage, which essentially gives us 100% coverage from a machine learning perspective, right? We can do this pretty much for every market in the country. It allows us to really understand who are going to be potentially good members for you that are maybe a hybrid of ideal members and who you want to acquire now, because we have all of this additional data beyond just the four walls of your credit union. And of course, this will bring up the natural, oh my God, don't use my data. Don't worry, we don't. We don't use your data to train any large language models or anything crazy like that.
No.
But yeah, that is how I think about that. I mean, I could probably do a podcast just about member acquisition and everything that goes into that, but at a very high level, that's how we think about that.
Now, you guys did not start with credit unions, right?
No, you can think
utilities
of us as a customer intelligence for highly regulated service providers, because it turns out, if you look at it in that way, utilities, which we did start, we actually started with nonprofits and economic development. So credit union is actually a return to our roots in that way. But even utilities and credit unions, shockingly similar challenges, because they're highly regulated service providers with billing relationships with their customers or members that interact with them every so often, unlike Netflix or Amazon or Facebook, where you
Yeah.
can like move your mouse 1 pixel and they're like, you had eggs and bacon for
Right.
breakfast. They know.
Yeah.
By which direction the mouse went, I don't know.
I mean, there's also like tons of state regulations that every credit union that we're working with deals with. Every
Right.
utility is exactly the same way, whether or not they're a municipal utility or they're investor owned. And
Right.
the data that goes through any part of the banking system, and honestly any part of the utility system, there are parts of it that are extremely sensitive. For utilities, we've got infrastructure that has national security importance, that if it's affected, that's a big deal. Also, you don't want your neighbors to know whether or not you owe money on your water bill or not. I think it's the same way with a bank account, where you don't want anyone knowing your private business. And so we have to treat data privacy extremely seriously. It means that we have a lot of roles internally. Even though we use AI, we have to use a specific kind of AI that, number one, is not traceable back to any single individual, based on training data, based on models. It cannot be anything that exposes personal information about anybody, which means we don't let things leave our four walls. We don't let things leave the United States. All of our servers are here in the US. All of our workers are here in the US. And, we have to take extreme cautions that maybe the open AIs and the Anthropics necessarily don't have to, because it's just a different business model.
Right. Right.
And, from a regulatory perspective, same deal with utilities. You need to make sure that your models are fully explainable and auditable,
Yep.
which most of the AI that people are talking about isn't. Also, bias identification and mitigation, extremely important. Most solutions out there just don't even touch that. So because, our focus is on highly regulated areas. And, it is funny. We started with utility, and it's still a big part of our business, but credit unions by far has outpaced that at this point as well, which is, credit unions have been a very good industry to us. So, part of why we put out the CU scorecard is to give back. Plus, obviously it helps us have the conversations we want to have. But I guess
it's
the industry.
It's a great starting point for credit unions to go see what you guys do, right? Yeah. It really was. And you could just plug your credit union name in. I even tried to challenge you a little bit. I did some initials. You still came up with it. It was really, really good. Congratulations. Awesome. I have to imagine, though, that the utilities experience or experiencing things outside of credit unions, right, makes you more able to understand consumer behavior, right? Because members are consumers and they make decisions to buy, products, services every single day. So the wider net you can cast around that consumer behavior, the better the models can be for credit unions.
Yeah, absolutely. I think one of the things we talk about all the time is payment hierarchies. So what if you've only got enough money in your paycheck to cover not all of your needs? What do you prioritize first? Is it rent? Is it your car note? Is it your cell phone? Is it you're keeping your lights and your water on? And understanding when there are more people struggling with that hierarchy is extremely important macroeconomic information. It's something that we can see in almost real time, just with the amount of data that we have available. Again, have to keep it anonymous, have to keep it private. It stays within our four walls. We don't regularly share this with anybody, unless it's individual results with our individual customers. But we can say, hey, here are the benchmarks to say, here's what's going on. And especially, I think the most important thing to know in any economically volatile times are the deltas. So what's changing? Is it going up? Is it going down? We always talk about the idea of recession being a people and not a state of the economy. They talk a lot about the K-shaped recession that we're experiencing right now, where the haves are doing great and the have-nots are really struggling. And especially for our credit unions, who oftentimes have special programs for people who are underbanked, who are low income, both sides of that K are actually important. And so being able to serve both for us, I like that we don't do any one thing for our customers. we have playbooks, we have resources, but honestly, once you have our full system, you're only limited by your imagination. And the fact that we can help you serve both sides of that K, I think, is one of my proudest things that is within our capabilities.
Yes.
So your solution delivers a reusable tool to the credit union that allows them to go in and achieve their own insights, look at more experiences, track performance with KPIs. They don't have to keep coming back to you for that kind of intelligence development.
No, we do have an incredible customer success team that is like
Mm-hmm.
very white glove with our customers, because we know that this is a paradigm shift for some of our credit unions. But yes, it's a platform. Our whole thing is giving you a tool that allows you to basically match the type of experience and data prowess of the big banks without having to hire a whole other team, or invest years into a whole new kind of data model and system.
Right.
We really do want to level that playing field, for lots of reasons, including the fact that the big banks just throw 100 data scientists in a room. So they're also not our market.
Yeah. I think a lot of the credit unions we work with, their data scientist is their marketing staff, or, it's somebody who has, maybe some inclination towards it, but it might be one person. And we really want to make that one person as effective as a dozen or more people. That's our whole reason for existing.
Is there a target credit union profile that makes a really great customer?
We serve everyone from 100 million to over 10 billion. So we, our pricing scales with your asset size, basically. And because again, like if you're way smaller than like 100 million in asset size, then you're kind of getting to the level where statistical significance becomes less of a sure thing. But really above that, we want as many credit unions to be able to leverage this kind of technology, because we really do believe in the mission that this industry has. We're also just seeing in the data that half of it is really struggling right now. And part of what we want to be a solution for is that bridge. So again, 10 billion, great, let's do it. But we don't want to hyper focus on just that one side of the K, if that makes sense.
Yeah.
What are the types of things that smaller credit union? I mean, that is a huge range, right? 10 billion to 100 million.
Mm-hmm.
If I'm a $100 million, $200 million credit union, are there unique skills I need to have to bring to the table in order to use your tool, or are they something that can be developed over time? So
from our perspective, right, there's no prerequisite skills that you need to have. Really, we built our platform for marketers, for not necessarily data people.
Right.
What we don't do is necessarily the actual marketing, right? We'll help you automate it. We'll help you create content and things like that. But still need a human in the loop, especially when you're doing this kind of communication in a highly regulated environment. But the key thing is that if you have one marketing person, this kind of stuff sounds like, and the 100 million credit unions do maybe have one marketing person. The 10 billion credit unions have a room of data scientists. We love them and work with them too, right? But when we're talking about the team of one or the team of three, it's really all a matter of surfacing all of the most impactful opportunities first. And being really clear about, here's how to define success, here's how to do the thing, click here, watch it grow. And it's iterative, right? Data science is always iterative. You do the thing, you see how it goes, you adjust if you need. But
And to make that really concrete, we've done anything from reducing the customer acquisition cost overall. I think we've cut it down to like 20% of what the original numbers are. So making sure that every single dollar counts on those smaller institutions, taking existing customer populations, getting member populations, and making sure that, hey, they're engaged and they're using as many services as they possibly can within your credit union. You might be working with car dealerships, and you might be having customers come through your door through car loans. How do you turn them into real customers? So finding unique sources of customer acquisition. So we'll work on it from all angles, because it's never good enough just to do one thing. I think we're all pretty aware of that. You gotta, the more you put out there, the luckier you get. So what we want to do is help build a strategy, because I think everyone knows they need to be doing something, but there are opportunity costs around what you do. So choosing the right thing for you, for your location, for your member base is one of the most important things you can do. So for these smaller organizations that we work with, that amount of awareness is, I think, a real game changer for what they're able to do with the limited headcount that they have.
And by the sound of it, it sounds like you could do some of that within 90 days.
Yeah.
Oh, yeah. Yeah. We have a bunch of case studies. If folks listening are interested in some of the results, we have some great case studies on our website. And we're not kidding. I know it sounds crazy and unbelievable, reducing CAC by like 80%, but we have, through specific expensive channels like direct mail that are so expensive, a lot of credit unions don't even bother. We're able to suddenly make that an affordable channel. Not only were we able to reduce the CAC for that particular credit union, they also grew 17% in their target market in less than 6 months. So that was a really cool story.
Great results, guys. Great results. Talk to me a little bit about, you recently received an investment from Curql, right? Talk to me about what your hope is that investment's going to unlock and open up for you.
We're really excited about the amount of development we've been able to do. So there's a couple of things that I think have been really fantastic. So some of that investment has gone into things like the CU scorecard. We've been really developing just the pace and amount of innovation we're able to create as a company. So, and enabling more of our staff, even the non-technical people, empowering them to really think hard about ways to leverage. Like, we just have this really amazing source of data. Even if we're really, really protective of privacy, there's still a lot we can do to help unlock a lot of value without compromising any of that security. So we've really leveraged the brilliant people who work for us to come up with some amazing ideas. That CU scorecard was just one of them, to get things out there in people's hands. One of the other things we're doing is creating just better, smarter AI internally. There's certain standards that we have to hold. So for example, can't compromise privacy. We do not use LLMs in our core product because we cannot guarantee where that data goes. But we can take our own internal systems, which honestly, like a lot of people worry about, for example, carbon costs for training AI. We're able to build really efficient algorithms. I've been doing this for a very long time. The cost of compute is actually very important to me. So we can do things very efficiently, build next generation models, build ones that are very intelligent, very exact at what they're due. We have over 90% accuracy, for example, for understanding when someone's not going to pay into a loan. So things like that can be really cool. And so we've been investing a lot of that into our technology. We've also been building out our overall team. We've been increasing our availability in places where we're able to reach out to. I don't know, Tomer, do you want to add anything to this?
Yeah, I mean, I think, Curql came in, not just this latest round, they've been with us for, I think, 3 going on 4 years. And they really, I mean, you're talking to us now, like sort of in the epilogue of this great relationship with Curql, but they really helped us quickly understand what credit unions care about, what problems are worth solving. And a lot of the success stories we've been talking about today that have been happening over the last few years is because Curql was able to help us really, I mean, even just making introductions to credit unions so that we can develop our value proposition around them was so valuable. So, I mean, I think Alison covered what we're doing with some of that investment, but it's just, for us to understand the market that we're building the product for. And, that's just been extremely helpful. And now I feel like a CU native, if that makes sense. But
See, he doesn't correct himself. I accidentally say customer all the time. That's wrong. Tomer's fluent. I'm still struggling.
it's hard because the credit union is your customer, right?
Yeah.
And when I was selling to credit unions, I had the same problem. And I've been in the industry a long time, because are we talking about the customer? Or are we talking about the member? I'm talking about the credit union is the customer, right? And then there's consumer behavior. So we can just add that to the mix, right?
Unions are getting into commercial too. So it's like a whole other type of...
Exactly. Commercial members, commercial consumer members.
Yeah, we can help with that too. If that helps.
Exactly. There you go. Perfect. So let me ask a question. AI is just dominating everything we're talking about, right? How do you think AI will change the relationship between consumers and their financial institutions? Say in the next horizon, the next 5 years. That probably is a long time from now comparatively, but what do you think that looks like?
Yeah, AI is going to do a lot of things to our planet over the next 10, 20 years. So I'm going to keep my predictions a little grounded, because there's, a version of this conversation that goes, what will my kid do in 20 years for a job?
Yeah.
But at the very least, in the near term, I think, and this is what we're trying to help with too, is that AI is going to become one of the default modes of interfacing with really anyone, any institution, and there's a lot of ways that you could implement that. There's ways to implement that will be brittle and break and will it's just like no one says no one gets fired for like hiring IBM anymore for like these kinds of reasons, right? You really have to make sure that you're doing this the right way. And I guess all of that is to say is that this trend where more and more members expect a certain type and degree of experience from their service providers, not just their FI, but all of their service providers. We've seen that happening as people get used to like working with Netflix and Facebook and Meta and all of these things. They're actually used to having, a super personalized experience that anticipates what they need. And I think that's just going to become even more just kind of like table stakes, in a very short, 5-year term, 20 years.
Yeah.
I don't know, man.
I mean, I'd say like even really simple things like the search box on your website, people's expectations of that little search box have completely changed. So, it used to be, you'd put something in, maybe you'd get kind of a match. You'd have to search around and find the right thing. Right now, people have expectations that you're going to figure out what I want and you're going to give it to me in like the top result every single time. And people get really frustrated when they don't get that. Is it fair? No. But it's definitely how the world is changing. And so just the way people interact with really basic things, they're on the bright side, they're going to be less likely to call into your call center to get basic information. But on the other hand, they're going to have really high expectations about what you can deliver just using the most basic features on your website.
And actually, that made me think, because I gave you like an optimistic 5-year answer and an abyss version for like the 20 years. I actually think there's an opportunity in that too.
Yeah.
People are going, especially younger people that you want as members, are going to continue to have these big question marks about the future of employment for probably at least the next 20 years as the dust settles around this very impactful, pivotal technology that is going to change how we do things and how work is. It strikes me that credit unions can be a really good partner to the people who are struggling with these kinds of uncertain futures. And this is less about AI and maybe more about positioning and branding. Probably helps if you're an AI forward credit union to be able to help your members through that. But that would be another thing that maybe I think about as a CMO or a VP of marketing at a credit union right now.
Yeah, I've been seeing things like the FIRE community, like financial independence, retire early. There's a lot of people who are putting real serious money into that. And I think that's actually a huge opportunity right now, especially for people who are mid-career and they're like, look, if I cut down my costs, is there a way I can set up something where I can sustain myself until I hit retirement age? And, that's something that's been around low key. I've just been seeing it blow up left and right now. And looking at my own credit union's website, there's definitely a couple products that could be promoted that would, for example, hey, if you're going to have an emergency fund, it should be in a high yield, interest bearing account. Can I help you with that? There's certain things around how people are thinking right now. And what I think the real benefit of how we think at BlastPoint is that we expect people to change on a weekly basis. We expect people to change almost on a daily basis. And you should be able to work with things that move really quickly. We started out with utilities. One of our big moments was COVID. And that was where the entire industry changed in 30 days. And, we went from people who paid on time every single time to people really struggling to pay their utility bills. And we were able to address that within 15 days. We had models up, trained, and ready to go to understand, because you can have two customers, or if you're a utility, two customers who look the same on paper. So you can have them make the same amount of money, but you've got one who's a retiree on Social Security. They were very low impact to the changes in COVID. In fact, they might have had more spending money because they weren't eating out as much. It was the hourly workers, especially anybody who was relying on childcare that was suddenly not available, that made a huge difference in people's ability to keep up with their bills. And, in our history, we've done this over and over and over again, where the world has suddenly changed and we were ready. And that's what we really want for all of the institutions we work with, whether it's a bank or a credit union or a utility. If the world is changing really rapidly, you should have the data to be able to react to that in the moment. You shouldn't have to wait for it. You should have enough at any period of time that, even if you're just working with a hypothesis, you can do it that day. And that's the really important thing to us.
Well, I'm gonna put an exclamation point at the end of that by saying I think that is exactly how we end this discussion, right? The world's changing fast. Everybody would agree to that. You need to have data at the moment of the decision, right? And that is certainly something that BlastPoint can help with. Tomer, if somebody's interested in speaking to BlastPoint about an engagement with you guys, how do they reach you? How do they reach the company?
So first of all, our website is blastpoint.com. You can see all of our case studies and a bunch of our resources linked right there on the website. Feel free to also message me, tomer.borenstein at blastpoint.com. I will connect you with our sales team, but probably the easiest and most exciting way to do that is to go to cscorecard.blastpoint.com. Just log in, enjoy your free scorecard, and my sales team will be in touch.
There you go. Excellent. Excellent. Well, guys, really appreciate you building something special. Thank you very much for sharing it with us today.
Thank you
for having us. Really appreciated this.
Yes.
Alison and Tomer, thank you very much for joining us. I do have this one final thought. It's clear based on what BlastPoint is doing that AI in the future will both change the channels that we have today and be a channel in and of itself. And credit unions need to stay tuned to figure out how they're going to do that and make the most of that opportunity for their members. With that said, if you like this content, please like and subscribe on your platform of choice. Thank you for being here. We will see you next time.